Hi, good morning, everybody. Can you hear me loud and clear? If yes, give me a thumbs up. Okay, good morning to you. Right, today is the 1st of December, okay, 2020. Today is a Super Tuesday for us, for PhD students. So later on at 2 p.m., we will have our internal, yes, I repeat, later at 2 p.m., we will have our internal special Super Tuesday sharing. All right, very special one, because I'll be talking about this, the number, the 2012 thingy itself. All right, the movie, right, 2012. You watched the last Sunday MAO, right? I did tell you about one of my favorite movie, and I told there's 4 numbers that I'm watching out, right? 2012. All right, so later on at 2 p.m., all students, okay, only PhD students, you need to turn on your view cam. Yeah, you must turn on view cam, and I will be sharing with you this particular topic. Now, this thing is only, the recording will be done, yes, but it will only be for our own usage, which means only student can access to that only. Okay, all right. So see you at 2 p.m. Today is going to be very exciting. All right. So let's us zoom right now to our today's sharing. Okay, can you see my PowerPoint? Yeah, okay, all right. So today is 1st December 2020. Right, as usual, this is our Trade with the Boys daily MAO market analysis and outlook. Okay, now kindly give me your disclaimer as usual, please. All right, so kindly key disclaimer into the Zoom group chat so that all of you will identify me when I share and stuff like that. All right. Now, end of the day is that I really want you guys to make money from the market. That's my only objective. Okay, you lose money doesn't benefit me. You make money, it only makes me easier to conduct my classes and do my previews. All right. So of course, I will do all my best to make you make money. But if when I speak and you misinterpret what I say, then that could be a problem. Okay. So today I will go a bit slower. Okay, to explain to you now my view in the market. All right. Now, just to give you a bit of extra stuff, okay, do note there are a few things ongoing for the market right now. Number one is that usually in December, if a company shares are doing very well, okay, usually the companies will consider to take some profit off the shelf and then, reduce their tax costs. That's one of them in December. Number two, now, usually banks by end of this year, they will have to do what they call interest payout, like for the fixed deposit and interests. And of course, if their earnings from the bank side doesn't do well because of this year COVID-19, then they may have to liquefy some existing shares to actually take out cash to pay for this interest. That's number two. And number three, very important, is that right, this coming 18th of December, it will actually be the quadruple witching again. Yes, quadruple witching. All right. So it's very near to the 2012 that I mentioned. So that's why I would like you guys to pay attention to this current month. Okay. So these are 3 things that I want to share with you. I can't wait for this Sunday MAO. So I share with you right now. So you know what to do in terms of preparation. But again, I'm not saying that the market will come off, but these are the fundamental reasons why we need to be careful. All right. So this morning we can see from the news outlook, right? We saw that Dow Jones took some profit last night. Okay, it came down as much as 500 points. Then towards the last hour, it went back up again went back up from the low 300 points. Well, because Federal Reserve came in and says that right, they are looking to again continue to stimulate the economy if necessary. Now, seriously, put it this way, we have seen this happening every time. All right, every Monday we see there will be news on the vaccine, which Moderna did that yesterday, but the market did not react much. Then only when Federal Reserve Jerome Powell came out and tell the market that, hey, look, then of course when he talks, right, when you want to do something like this, you always have this sudden influx of funds coming from nowhere to push up the market. It's always like that. But again, when you keep on doing this, and if the market knows that you are trying to push up something, but the fundamental is flawed, then things may happen. So Tesla yesterday gap up, right, hit $600. But I called for sell. Yes, I called for sell on Tesla. Later on, I'll show you the chart. Then of course, based on the monthly chart, right, the Dow posted the best monthly. So probably that was on purpose to make sure that it ended well. Then this is something that is very interesting. Now, Donald Trump says that the stock market will crash if Biden won. So again, he's again threatening the stock market. Recently, he has been pretty quiet. All right, he's really quiet. All right, seemingly that he will lose this electoral votes too if it's what's going on now from what the different states are producing the feel. But nonetheless, as well, right, think about this. If that is the case, right, he probably will want to make sure one thing will happen. Now, one thing is that Donald Trump has been always a big advocate of the trade war between China. And you know that recently in the, earlier this year, when there's a coffee company, right, that basically came up with false accounting, and obviously that is a China company. All right, it was such a big event, but end of the day, seriously, even the owners get out of it without being a problem. All right, then the thing is, out of nowhere, during the election, Alibaba got hit. All right, he came in with this problem. Then after that, it's all right. Now basically they are looking at how to regulate all the Chinese listed company in US. So if let's say there is a reason to make the market suffer, then one of them he will do is to make sure that the Chinese company have problem listing in China, in US, and I think that will be one big problem that you don't want to see right now. Okay, so let's look at the US stock market and see this. Now the Dow Jones, you can see last night the Dow Jones did came off, as I say, 500 points, but surprisingly they came back and recover over here. There's a technical support right here, but more of basically on purpose. And now the Dow is recovering slightly above opening price and above the trend line they're looking at. So the MA30 is getting nearer as it draw towards upside a 45-degree angle. So that means that, right, the market here is not moving any higher, but the compression of the MA is moving towards it. So what we're looking at is somewhere around here. Okay, that is where potentially there might be a compression, and then we may have to make a decision. So where would that be then? Let me take a look right here now. Give me a short moment. That will be around the 6th to 7th of December. Between 6th or 7th December, theoretically, the market has to go new high for the uptrend to resume. But from any round from now till then, there is no new high. Then, of course, by 6th or 7th December, the market may have to make a decision. So watch out for this point here itself, 6th to 7th of December. Write down somewhere this date, because later on we're talking about this during the 2 p.m. session. Okay, so for the Dow Jones M15, I told you guys that market will come down to 61.8, and indeed it really came down to 61.8. But before you know this, immediately the market rebounded. Right, immediately the market rebounded from the 61.8 level back up again. So I'm not half surprised if we challenge here at 29,800 again. I'm not half surprised if challenge at 38.2. So watch out for that. That's 29,800 level. Okay, watch out for that. And weekly chart wise, well, it's a very unique chart pattern now. All right, some people looking at this could be a potential quadruple top. All right, is it potential? Well, put this way. I would rather do this thing. Give me a short moment. I show you now. Okay, you see, I'll take the midpoint of this white candle, and I put a midpoint there, taking the body divided by 2. I will get about a support of 29,567 around there. And if the Dow Jones stays above this midpoint, the white candle, I still think that the Dow will go higher. Okay, but if the Dow Jones pulls back and go below the white midpoint of white candle, then I will tell you to hit for the heels. So are we clear with that? All right, I repeat one more time. Weekly chart, the white candle that we saw last week, take a midpoint of it, take a candle opening and closing, divide by 2, you get a midpoint. If the Dow stays above the midpoint, we should be still seeing a little bit more upside. But if the Dow Jones close below or trades below the midpoint, then do consider to hit for the heels. All right, clear? If all clear yourself, can you key number 1 into the group chat? Okay, thank you very much, guys. Thank you. Wow, how many people we have today? I think I saw 100, I think. Oh, 110. Thank you, guys. Okay, now thank you so much, guys. Now, this is the NASDAQ, and this is incredible shit, really. Because what I did was that I take this point A, and I link it with this point B, right? Right? So what I did was yesterday, I do these 2 points, and I draw the line up, right? Remember that? And when I did that, wow, look at it. Point C was yesterday's low, right smack there. The NASDAQ came down all the way, hit that point C and rebounded immediately. Now, this tells me one thing, guys. You can consider drawing this on your chart. Okay, I repeat, you can consider drawing these 3 points, these 2 points on your chart. And when a technical point is so powerful, whereby the market really listen to it in a way, then this trend line cannot be broken. I repeat, when a trend line is so powerful, whereby the market listen, this trend line cannot be broken. So if the market, the Nasdaq want to go high, let it go higher, no problem. Okay, we just enjoy the ride up. But if one day the Nasdaq just happen to go down instead, like this, okay, then there will be significant selling. So watch out for this itself, guys. So you can consider drawing that, draw on your own chart, draw these 3 points, these 2 points, you will get this third point connecting pretty nicely. So if any one day the market broke this trend line, get out, really get out. All right, you heard me clear and clear, huh? Okay. Now, for the Nasdaq weekly chart, the longer trend chart, you can see that it's compressing at the top. Interestingly, the date that I have on Nasdaq is about the same as the Dow Jones. So it seems to be 789 will be a very important level dates for you to watch out for the Dow Jones, and that will be next week. That will be next week. All right. So traders just watch out for this particular time when the market have to make a decision. Okay. S&P 500. Now S&P 500 yesterday they did a BMB movement. That is a big movement bar. So which means that today there will be what you call expectation of a breakout or a breakdown. So today, watch out for the S&P 500. So we look back at our PSP system for today for the Dow Jones. Well, the market is staying above opening price and above P1. So at the moment now, it's bullish. Okay, at the moment now, it is bullish. You heard me correctly. Yes. Yesterday, we were bearish. Today, we are bullish. It's just day-to-day movement. All right. So as long as the Dow Jones stays above the P1 and above opening price, P1 today is 29709. As long as the Dow Jones stays above it, we are supposed to stay bullish for today. All right, stay bullish for today. Now, only if the Dow Jones later on, if it ever breaks below the P1, then you can go for some selling. If the market goes below the opening price, then of course the selling will be even stronger. But at the moment now, sorry guys, if you are short the market, be very careful because now it's at a bullish term for now, this moment. Okay. Right, that is for the Dow Jones. Okay, then now we switch to something like the gold market right now, fundamental first. Okay, now for gold, apparently now there seems to be some recovery at about 1775, the level that I mentioned. All right. Now the thing is this, they are saying that the dollar continued weakness, but gold plummeted. Right. So this is what you can see right now. The dollar weakness is supposed to help gold, right? We all know that fundamentally, but it's not. You're not seeing it right now. So that's why I keep on saying this, guys. Fundamental has its limitation. If really 1 + 1 = 2, then seriously we have billionaire and trillionaire running around in the world. It doesn't work that way. It really doesn't work that way. All right. So the thing is this. People are still forecasting now it's 1750 now. Yeah, it's being revised. People look at 1750, 1740. Whenever the market sells big time, you always will hear 2 waves. First wave is people tell you that you go down lower, and normally it goes down again. But usually the second wave, when people tell you that you go down even lower, like 1640, 1650, and then the market doesn't go down, right? That is whereby you should see a potential recovery because this is how the boys work this game. Now I'll explain to you more about my forecast on gold shortly, and I need you to pay great attention so that we will not get ourselves at the wrong side of the market again. So for gold fundamental, the conventional indicator is like this showing now. Okay, gold conventionally is showing me that it's still on the way down, but the RSI reading is really at the low 30s. And if you look at the last few months, the last time we saw the RSI hitting 30, okay, was back in March 2020. Now, basically to me, this is not a bear market. As a matter of fact, it's a bull market. Yes, you heard me correctly. Now, when we look from short-term point of view, okay, from short-term point of view, okay, short-term, I have been calling for sell since this point here. Okay. Okay, the market will sell because in a bull market it's up, that's down, that's up, that's down. So where are we now? This A is this point A here. Can you get it? All right. So there will be this movement down, which is what we are seeing right now. Okay. Now for the market to resume this bull trend, okay, to go to a new high, there will be a point the market have to play here. And what I'm focusing is I believe it'll be something like this. Okay. Can you see that? Like this. Okay. So what I'm saying is that now where we are now at this point here is about approximately 1763 level. This point here is 1837 level. And if let's say I'm right, only if I'm right, the market may go down to about 1720 level before it bottom out. Then it generates the upthrust towards the new high, which my personal take is 2218. Okay. Now this is basically my personal forecast. It doesn't mean that it will have to happen. It's just a personal take right now. Who knows, the market already bottomed out at 1763 and then this start the rally all the way to 2218. It is all possible. Anything is all possible. But fundamentally, as I mentioned to you on Sunday MAO, the equity market is at all-time high. So logically, we have been seeing that when equity market pulls back, right, there will be margin calls. And of course, this actually is this is going to be a point whereby there will be another round of profit taking. So all clear with what I just said? Understand what I say? Anyone have any questions for me? Okay, if no question, key 1, 2 in the group chat. 1, 2. Okay, okay. Now I want you guys to take something that I want to share this with you as a friendly thingy. You notice that in 2018, gold hit a high right here, and then it plunged all the way down to 1177. Remember that? Okay. I want you to remember this. I put a line right here now. Okay. Now this date is April the 11th. April the 11th. Can you see that? Okay. April the 11th. Okay. Then now, if I take the Dow Jones chart, okay. All right. Can you clear your throat? Relax a little bit. Okay. And then we do this Dow Jones chart, and I compress the chart again, and then bring it back to where 2018 was, and then I put April 11th. Okay, can you see that? So the thing is this, okay, you can just compare and contrast. Let me just see if I can compare for you guys. Give me a minute now, guys. Well, this is limited function to do this. Okay, can you see that? Okay, so the thing is, you can see right now, this is the gold chart and this is the Dow chart. Let me make it a bit smaller so that it looks a little bit similar. Okay, what you saw was that the gold price basically plunged all the way from 2018 all the way down. until July. Okay, so you look at it, this is the point here. Okay, this is August 20th. And you look at it, August 20th is somewhere around here. Okay, can you see that? Okay, can you see that? Okay, so what I'm trying to explain to you is now you are seeing that gold basically goes down. Okay, Dow goes up in a way. All right. So you can see that from all the April back then, the gold price came off, right? And you can see the Dow Jones went up. Agreeable? Okay. Then after that, from this point, the gold started to rally all the way up. Then the Dow collapsed. Can you see that? Can you see that? Okay. So now the thing is this. The question is this, okay? Will this actually repeats? Well, if you look at this point of view, that was whereby the thing was simple to understand. Oh, gold goes down, Dow goes up. But the problem is that now that gold comes down, Dow didn't move. Okay, that's the problem here. The gold goes down, but the Dow didn't move. All right. So which means that, right, if let's say we look at this point of view, then there will be one point whereby you will see that the gold goes up and the Dow comes off. Okay. All right. That is what I'm trying to explain to you here itself. Okay, in terms of the relationship, because now the gold has came down, right, but the Dow not moving. So it's either that the Dow is waiting for a new push up, or the Dow is already hit the point, the maximum, and you need to really, he's holding on. And then what happened next? So right, it may cause this to happen. So that's why my personal take is this: there will be another round of selling later on in gold after the initial recovery. And then after that, when the gold really hit a good bottom, right, the Dow will be coming off. And then you will see that the gold price go up on its own and the Dow keep on falling off. All right, this is my personal take on this longer term for gold and Dow relationship. All right, I hope you understand what I'm trying to say. If I lost you, apology for that as well. But it's a very long-term view. That is my view for next 3 to 6 months from now. Okay, all right. So for today, in terms of crude oil, let's take a look at crude oil. Oh, sorry, in gold, sorry. Now for today's gold now, this is the day chart. Okay, let me just take this away. Okay, for the day chart right now, okay, ignore the KSI because I haven't changed over. Okay, this is the KCX right now. You can see that the blinking is still blinking for the 1, 2, 3, 4, 5, 6, 7 days already. Now, seriously, my personal opinion is don't short gold anymore for now, right? Because the last time we saw something like this, whereby gold has a huge chunk of green KCX at the bottom, the last time in history, or in terms of patterns, the last time we saw this was somewhere around here itself. Okay, somewhere around here. Okay, then what happened after that? The market did rebound a little bit. Okay, let me just show you numbers now. The market did rebound about $35. About $35. Okay, now at the time the gold was only trading at 1280. So doing our percentage wise, based on today's price now, maybe about $45. So from where we are now is 1777, right? Okay, so 1777. Okay, we take 41777 and we plus $45. Okay, on an estimate, what do you get? Everybody, what do you get? 2. All right, 1. All right, that will give you 2 again. Correct enough. Yeah. So I believe that gold might be recovering to 1822 to my target of 1837. Okay, so I'm calling for buy in gold. All right, when the techniques allows you to do that, right? Short sellers, I think that you can just go slow right now. Go slow doesn't mean you must cut your short right now. Just make sure you put your SWL and then you let the market go towards your SWL. All right, yes, indeed, Robert, there's another one in June, right? In June, June? Somewhere June 2 for gold. June? Where's June? Sorry, where looking at? Which year are you looking at, Robert? Here, is it? Okay. Yeah, okay. Then but gold came down off quite a fair bit before it actually bottomed out now. Okay. So I'm just saying that now, in my perspective, I believe that gold has already hit a temporary bottom. All right, temporary bottom. All right, if gold is to recover from here, 1822 to 1837 will be my target range. Okay, all right, all clear on that. Now again, I'm not quoting you to buy low now and buy a lot of gold, but if the rules allow you to buy, you can consider buying. If not, just stick the rule and sell short if you think that the price will go down further. So be very specific here as well. Okay, all clear on that? If all clear, KK 1, 2, 3 into the group chat. 1, 2, 3. Okay, thank you guys. Okay, so for crude oil, right, crude oil also created a BNB movement yesterday, so which means that crude oil also will have to make a decision within the next 2 days to do up or down. Now, of course, if crude oil stays up, the Dow will go up. Just remember that, okay? If the crude oil plunge below 44.50, then there will be selling. 44.50, all right? That's somewhere around here. All right, 44.50, this level has to stay supported for crude oil to continue its upside. Okay, so if crude oil comes down, there will be some selling in the equity market. And Hong Kong, I already shared with you guys on Hong Kong yesterday to draw this trend line. And I told you guys, this is what I say. It's the same thing what I share about how the Dow Jones and Nasdaq will perform. You see, when the market yesterday, Hang Seng opens, right? When it opens slightly outside the trend line, straight away, Hang Seng plunged quite a fair bit. Yesterday, Hong Kong came down almost 500-600 points. But of course, it could be because of the US market was coming down a little bit too. But nonetheless, it's all right. When you draw trend line, when the market basically stays out of trend line, that's what happened. So for today, Hong Kong, I am quite confident tell you that it will touch back to the MA30 first. MA30, that level apparently will be about, okay, about 26,170. 26,170. All right. So later on, Hang Seng will likely gap up first. Then after that, if the selling resume, it will come back down to 26,170. If the Hang Seng stay above 26,170, for short sellers can consider buying back some position. If not itself, right, be careful. If it breaks down, there's a huge gap to cover all the way to MA200, and that one is pretty big. It's 24,875. Okay, 24,875. All right. Okay, and I promised you to show you this Tesla, right? Okay, so yesterday Tesla, let me just bring it to you, Tesla. There we go. Now, yesterday Tesla, we have a very powerful pivot point yesterday at 589.24. So that's why when Tesla opened at about $600, that means that we're talking about this before stock split, and now it's $3,000, right? So I was not comfortable with that. I don't think Tesla worth this price, at least in my opinion. So that's why I call for sell. And of course, when Tesla broke below my pivot 2, you know, right, below OP, below pivot 2 is a very powerful bearish signal. And that's why Tesla plunged all the way down to a low of 550 level, okay? So that's why if you follow the PSV system, you sell at 589, you can buy back even at 550 or things like that, okay? That is what you should do for Tesla. Now, Tesla, why I highlight this was today is a BNB. Now, BNB means big movement bar. That is a part of the theory in our PTP program. So this tells me two things, guys. For Tesla lovers, okay, Tesla lovers, you will have to take this point here now, this point as a form of resistance. Tesla haters, okay, those who hate Tesla because it's so high, it had to stay above this support. If Tesla shares goes below this point, Tesla share will go down further. Okay, it will go down further. But if Tesla goes up, wow, Tesla can go even higher. 650 wouldn't be a problem. Okay, 650 wouldn't be a problem. So traders, you have two sides of the coin today. Take good use of it as well, right? This will help you quite a fair bit. Okay, all right, huh? So Tesla traders, just take note of these 2 points, the two extremes that I'm looking at right now. Okay, all right, and there's one more counter that I want you to take note is this company called Boeing. Okay, yesterday Boeing created an inverse pivot. Hence, therefore, same thing. If the market goes below opening price, then there will be some selling, which indeed really happened for Boeing last night. Okay, now why do I want to take this company as a point? Because we know that the recent upside is because of a lot of buying from the governments and also a lot of optimism of the COVID-19 situation turning around. But of course, if the situation doesn't turn around, then this actually will bring this share price down. And if this share price comes down, then Dow Jones will be affected. So that's why I'm watching this Boeing rather closely. Yeah, indeed. I did share my friends to consider doing some short selling on Boeing, which they did some, and just for protection basis. Okay. And one more company, I know that you may not like me saying this, but well, I've never go to Disneyland yet in my life. So this company, right, just caught my attention. Okay, same thing. The way the chart moving is pretty like the Boeing, but in terms of the last 4 days chart movement, right, it doesn't look nice in my opinion. Hence, therefore, right, if there's any form of the COVID-19 virus continue to spread, right, this company, I believe, will get hit pretty badly. And there's a very massive gap right here, a massive gap. So if there will be a gap so massive, and if the things come down, right, this could be a free fall on one day. So I'm not half surprised that if one day things really happen, okay, unfortunately, then there could be a swing of a free fall on this Disney counter. And that will basically crack the economy in my personal take. All right, so this is a company called Disney. Okay, all right, so that will be all for today. All right, I've finished my sharing. All right, if I miss anything, let me know. Okay, so first of all, guys, once again, we have our webinar ready for GM1 to GM11, GM10. Next week, we will be allowing you to access to the webinar. Yes, next Monday, you will be allowed to access already. You can go in and watch all the videos of these techniques from everything about day chart, pivot, KTR, everything is all accessible online. All right, so for public members, if you want to join us to enjoy all these videos, then you just give us a PM and we get back to you. And before I go today, Tim Howard as a food for thought, winning is fun, but those moments that you touch someone's life in a very positive way are better. And I believe in that. That's why I always do this MAO every morning. I hope that you guys will be touched, and then you will make money from the market and we lead a happy life. All right. That is all my reason for doing MAO. Okay. So I hope you guys enjoyed this session today, and I hope that you make money. All right, guys. Anything else? I will see you guys online again tomorrow on MAO. For students of mine, do take note later on at 2 p.m. We will have a very special segment whereby I'll explain to you why I can get a little bit of AG in the market for 2012. Okay, guys, take care. Bye-bye, guys. Bye-bye.